going on, guys? It's Aaron from Market Alert, giving you your daily market alerts for stocks. In today's video, we're going to talk about why cruise line stocks are on the rise again. But before we get into it, if you like what we do here, smash that like button and comment below if your next holiday is going to be on a cruise. So what exactly happened? Cruise line stocks continued their volatile run on Tuesday, but this time shares were bouncing higher. Carnival was up 14.9% earlier in the day and was later up 6.7%. Royal Caribbean Cruises jumped 17.1% and was later up by 10.1%. And Norwegian Cruise Line was up by as much as 14.3%, but by mid-afternoon it was up by only 3.2%. The biggest reason cruise line stocks are up today is that the market is up big. The S&P 500 was up by 3%, and highly volatile stocks like those cruise lines tend to exaggerate the market's move overall. On a more tangible level, Carnival started to lay out its plans for reopening business, which could be seen as a bullish sign. After getting a 100-day no-sale order from the CDC, which ends on June 26th, the company said it will resume sailing on June 27th for most North American trips. The one exception is Carnival Sunrise seasonal trips out of New York, which were cancelled all the way till the end of 2020. Carnival has seen the most aggressive line in reacting to COVID-19 shutdown and shoring up its finances, so it's worth watching as it tries to get back to business. If it has ships sailing again, the government allows them to sail, and passengers are willing to buy tickets, then maybe the business will recover somewhat what it lost by the end of the year. But as we've seen in recent weeks, the rules of the game can change. And right now, the downside risk is still high for cruise line stocks. In the past 45 days, as multiple cruise ships had serious COVID-19 outbreaks on board, and in many cases were stranded for days before finding a place willing to let them dock and offload passengers, websites like cruisecomplete.com saw a 40% increase in its 2021 cruise bookings compared to 2019. UBS even reported that 76% of people who had cancelled their cruise in 2020 have chosen to accept credit towards a future cruise in 2021, as opposed to 24% who accepted a refund. On a recent poll, 4,600 cruise customers conducted by review site cruisecritic.com, in which 75% of respondents said that they plan to continue to book cruises at the same rate as before after the coronavirus outbreak is over, compared to 24% who said they plan to book cruises less often. But here's some silver linings. Shares of Carnival, Royal Caribbean, and Norwegian Cruise Line entered the new trading week between 70 to 79% below their January highs. Carnival and Norwegian Cruise Line would need to quadruple to get back to where they were 3 months ago. And that's not going to happen anytime soon. It will take years before the industry gets back to where it was last year. And that certainly is not going to happen next year or even 2022. And even when revenues return to 2019 levels, it will take even longer to approach last year's profit levels. The outlook is bleak, and investors don't have to see today's purchases roughly quadruple to come out ahead. If the three stocks doubled in 2 or maybe 3 years, they would be winners at half of where they were earlier this year. It may not seem fashionable to stay bullish on the 3 cruise line stocks given all the calamity, but after last week's bounce, it seems as if a few Wall Street pros are ready to dip in their feet back in the water. Analysts updated their position on Carnival over the weekend and sticking to a buy rating on their largest cruise line operator despite slashing their price target on the shares from $59 to $17. Shaving a price goal by more than 2/3 is rarely a good look, but $17 is more than double the $8 a share that Carnival had to sell its stock at in the secondary stock offering earlier this month. The new target is also healthy, set 37% above where it closed last week. Analysts believe that Carnival actually has the biggest hurdles to clear, since most of the horror stories of Corona smacked sailing that kept passengers and crews quarantined on board happen to be on Carnival-owned brands. Analysts are bracing for a slow recovery, but don't see Carnival as a bankruptcy risk yet. If the new update on Carnival is bullish with a decent price ceiling, one has to wonder about the prognosis for Royal Caribbean and Norwegian, which don't apparently have it as tough on a road back. Carnival, Royal Caribbean, and Norwegian Cruise Line have been raising money in recent weeks. Once they realized that the bailout wouldn't apply to them given their overseas registrations and minimal tab when it comes to taxes, they've been very busy securing billions in financing. It's not pretty given the convertible debt to dilutive conversion prices and high interest rates, but in the industry's darkest hour, they're able to secure a lifeline to stay afloat for several months. Potential passengers will also be receiving billions in the form of stimulus checks. You won't find too many people flipping those checks into future cruise deposits, but some of that money will inevitably trickle down to the cruise lines, which will likely be offering some pretty ridiculous rates. The near-term demand issue might also not be as bleak as initially expected, given the folks on now cancelled cruise vacations opting to take sweetheart deals on rebooked future getaways. The road back for the cruise industry won't be easy. The coronavirus crisis will take years for the leading players to overcome. But with the damage already done to the stocks and a pessimism running thick, it could take time to be a contrarian again. Thanks for tuning in to Market Alert. If you like what we do here, be sure to hit that subscribe button, and I'll catch you guys on the next episode.